I had a conversation at about 20 past 3 yesterday with the Premier, Alan Windey, and he was talking about the first of three provincially owned sites in the general CBD area, which will this year be put out to tender. The first of them happening before the end of the month, and he said that he hoped the first bits of accommodation could be moved into by the end of the year, which seems like quite an accelerated timeline, but perhaps it's possible. And the idea would be that private developers say, we'll do it, we'll do this, we'll build these apartments which fit into the affordable housing bracket, which is accommodation which can be afforded to be rented or to be bought by people earning between 3 and 22,000 Rand a month, as long as we are able to have another tower where we can build more luxurious apartments which we can sell for 3.5, 4, 6 million Rand, and then there's an opportunity for retail which we can rent out and make our money that way. And it led to a broader conversation, as often these prompts do lead to the broader conversation about the increasing price of property in Cape Town. This is a matter of interest. After that conversation, I took the purchase price of the house in which I live in Lakeside. It's not a fancy house, not by any shape, manner, or means. And we paid 250,000 Rand for it in December of 1998. And I plugged that number into an inflation calculator, and 250,000 Rand of 1998 money is worth 1,058,580,000 Rand now. 1,058,000 Rand now, so just over a million. And my house is valued by the city at 2.5 million Rand, which is just one very small indication. And Lakeside, I don't think, is the most desirable suburb in Cape Town. And the more desirable suburbs, property inflation has accelerated beyond monetary inflation by an even greater number. And one of the responses we got was this voice note from a listener, Mark.
Good afternoon, John. Afternoon, CapeTalk. I wanted to bring up an important point relating to affordable housing in the city, whether it be buying property or renting. I know there have been conversations in the past relating to Airbnb, which I can understand, but there's a whole extra element that I think people are missing, and that is that the base price of property, the cost of buying a property in Cape Town, is making it so unaffordable that one has to actually Airbnb a property out just to be able to cover the bond. And the main driver, in my opinion, is primarily down to the fact that there is nothing prohibiting foreign nationals from buying property in Cape Town with hard currency. I think the pound at the moment is almost 25 to 1. The dollar is 19.80, it was the other day. The euro also into the 20s. And, in any other industry, if you have this unfair currency advantage from another country, you would have some sort of tariff protection. And it's astonishing to me that there's absolutely no protection for the most important part of our societal fabric, which is our properties. And it's just something I'd like to suggest, that there is at least a tariff on purchasing Cape Town property, and possibly a surcharge on rates. Thank you.
Okay, joining us now via Zoom is Pete Ahmad, who is an independent urban planning consultant. Pete, good afternoon. Thanks for your time.
Good afternoon to you, John, and to the listeners. How are you this afternoon?
I'm in good health, and yourself?
All good this side. Thank you.
Is there anywhere in the world that does this, and does this with a positive impact? My instinctive response, sort of gut feel, without having any kind of background or access to research in the field, was, nah, that's not a good idea. But might it be a good idea? Is there a strong case to be made for what he suggests?
I think we need to go to the core of the problem, John, which is that it's not just Cape Town that's facing this housing crisis, and let's call it what it is, a housing crisis. Whether we're talking about Canada, Australia, the United Kingdom, the Netherlands, some of which have had massive post-war building of housing programs, and maybe over a period of time sold off some of that public housing stock. They are now facing huge challenges, homelessness, these issues which have been a challenge for Cape Town for many decades. And we're now seeing it play out in a global market, globalization. We probably end up talking about tariffs somewhere along the line, given what's going on in the United States at the moment. If you add to that the migration trends, particularly in the Western Cape from the Eastern Cape and from the Gauteng space, then I think it's no wonder that we are seeing a prices compounding in terms of the selling prices of the housing stock. At the same time, we're seeing the increase in materials, the construction materials, bags of cement, the cost between 2010 and 2025 is just massively up in terms of the cost of steel is also up. This is having a massive impact on affordability levels across the board. The question that you're raising, is it a good idea or not in relation to adding a surcharge or some sort of tax, property tax? I guess it comes down to the question of what's the slice of that pie that is foreign owned? And is it really significant?
Yeah, that's what I wondered out loud yesterday. Is there any research which says 2%, 22% of the property market for homes above 2 million rand in broader Cape Town are owned by foreigners, or whatever the statistic might be?
My understanding, and again, I don't have the stats and the sources, but something around the 10% is probably around what the figure that we're looking at. So let's say 1 in 10 transactions. It's not the majority. I think that's safe to say. And whether that's a Cape Town or a more global national figure, I wouldn't want to go there. But let's assume it's around a 10%. So you're dealing with 10. Is it 10% of the problem? Is it worth tackling through, let's call it a punitive tax on foreign investment? Last time I looked, South Africa was in the game of being open for business to foreign investment. Do we want to go that route when, in fact, the variables at play are not just the property transactions from somebody paying in pounds or dollars or euros, but is around how much the costs in South African terms in terms of ZAR for the building materials. So I think these are some of the things. And is there a cost benefit analysis that is being looked at for example, the National Department of Treasury, together with particularly the metropolitan cities and chief financial officers, to look at approaches to this in a sustainable way? Because, John, I'm sure you're familiar with the unintended consequences. Yeah. If we go this route, what are the unintended consequences that make us less attractive to foreign investment, whether it's in the property field or more generally in an economic performance which has been flatlining for decades now?
We played Mark's voice note relatively late in our program yesterday, so there wasn't much time for listener response, but what there was very supportive of what he'd put on the table. And I've just got the first of what I'm sure are going to be quite a few responses now. AB saying, I agree 100% with Mark. Foreign property owners should pay double, if not more, property rates and transfer fees. This surplus should be used to subsidize locals and increase services to underdeveloped areas. So there's a sort of thing. There's a 5 million rand house on the market. I, as a South African, have to come up with 5 million rand. A UK buyer has to come up with £200,000. That's considerably easier for the person to find. But then you have to ask the question, I think, having that person living in that house versus me living in that house, is there any extra? Do they employ more people? Do they pay those people higher? I'm not sure it's a kind of zero-sum game.
Again, John, I can understand why listeners would be supportive of it, because from the outset, it seems like a good idea. Yeah, they've got more than we have in terms of purchasing power. And I think there was a good statistic I looked at where it was in the US dollars, 1 million US will buy you 30 square meters of real estate, plus minus, in London, for example. Whereas in Cape Town, it's 200 plus square meters. So you're looking to a 6 to 7 times purchasing power in terms of what you can buy in those two locations. But I mean, the question becomes, where are we going with this in terms of, it's not just the private land and transactions that are important. There are many conversations that have taken place over many, many years post 94 around the use of public land. And, what if we were to start looking at a tax across the board of public and private land where land is being underutilized, and to try and tax across the board to try and get a better outcome in terms of spatial transformation objectives, better densities, and more effective functional cities, which has been a problem for South Africa since the dawn of the century and before. So these are some of the things where I think it's not just one approach, one tool in a complex economic toolkit, but a series of approaches whereby it may be worthwhile looking at in terms of those foreign purchase arrangements. But I don't believe for a minute that that's going to generate billions of rand that all of a sudden find their way to opening and unlocking development in great locations within the city of Cape Town for the poorest of the poor in particular, and those who simply cannot afford a rental or a market-related product. You mentioned that range of sort of 22,000 rand per household that's required before you can access anything. And that's why I think we see in places like Dunoon, Khayelitsha, around the city of Cape Town in the, let's call them post-1994 settlements, seeing massive private rental being developed in those townships on the back of private initiative and a complete reconfiguration of space through entrepreneurial developers who are finding and filling that gap in a very effective way. What does that mean in terms of trying to upscale delivery in that type of way, as opposed to saying we're going to look at punitive taxes on foreign investment? So I can understand why it's attractive. I do, however, question whether it's one of a number of things we should be looking at on a supply and demand side approach, which ultimately can have a much more effective outcome for Cape Town, in particular within central business district locations of Cape Town. If you look anywhere else in the country, typically at Joburg, in city of Pretoria, Durban, affordable housing and rental housing managed by social housing institutions, for example, has been an integral component of those central business districts and great locations for people to live, work and play. And what we're seeing now on the flip side of that here in Cape Town is the ability, the administration after administration has not been able to unlock that. And it's hopefully, as you say, hopefully we're getting through the province and the city a chance to see that changed in the coming months, if not years. So
Thanks.
That's good news.
Yeah. Thanks, Pete. Thanks. Pete Ahmad, independent urban planning consultant.